Hello, Pioneers, and welcome back to another episode of the Daily Candle Close News. And we currently see Bitcoin and cryptocurrencies and stocks are in a downtrend, causing a lot of panic all over the place. And I'm here to remind you that this bull market and bear market duality nonsense keeps people trapped, and it keeps people from building a fundamental investment thesis and strategy, and it keeps people from learning a skill like technical analysis that could help them understand what is actually taking place right now inside these markets. Everyone is screaming bear market, and I'm here to scream both bull market and bear markets are short-sighted, and they're never the bigger picture. It's duality, bull versus bear, left versus right, up versus down, inside versus outside. And I'm here to remind you that all that is just nonsense to keep you trapped from figuring out what is going on and from building a craft and a skill that you can utilize for a lifetime. We are still so early in this asset class, and it's not even funny. This is the very first asset class since the 1600s, and it will swallow every existing asset class known to man out there today, whether that's equity, real estate, stocks. They'll even one day tokenize our $30 trillion in debt and move it to the blockchain. So the foundation of what is happening right now inside these markets is based on drama and fear. So of course, right now we see crypto and stocks at lows. And it's all about theater. It's a show. And you guys, you weren't invited to the premiere, Pioneers. So look at Bitcoin over the past 13 years and somebody show me the bull or the bear market. And we can break that down and get in depth about blow off tops in 2018 and 13, yeah. But the conversation is still never really there because all this bear market nonsense we're hearing right now is getting a lot of people feared out of this market. And that's not where we want to be as pioneers, because we know that this market is built for the patient hands and the uncommon 1% who learn each and every year and are always winning because they're learning every day. They're building a skill and a craft that they can breathe and utilize and that they can own. They're always in a bull market. The person learning more and more, building a craft and a skill, learning how to read these charts is always winning. Are you winning, Pioneers, or are you caught up in the mix between bull market versus bear market? Are you caught up in duality? Because the ones who get in these markets when it's the most frightening, like right now, or boring, like it has been, those are the ones that win, Pioneers. I have firmly believed we'd see one last all-time high in this market, and I'm still on that determination. I'm using this last opportunity to pack my bags, load them, and stack them. We're backing the truck up, packing them, and stacking them right now, and buying this dip. Not financial advice, but we've got a 5 to 10 year investment thesis, so every dip we buy. So what we want to do here is not follow everyone else's theory. We want to build our own. What we are seeing right now is a back test of some very key levels of the 236 and 29K, 30K roughly, of June and July lows. A downtrend, pretty scary moment that then led to a relief rally and a new all-time high for Bitcoin. So we're seeing what I personally believe is a healthy and necessary revisit of these lower levels. The more trading range that we build between 30K and 40K Bitcoin, it shows me that if we do possibly see a new all-time high, we could soon resonate back down to these levels after a breakout, especially since we built this trading range for about a year plus now. So possibly returning back to these levels again shortly after this bull run is over, we can see this range be a very important range to pay attention to in the future. If we go back to January and our breakout in 2021 where we hit a 42K Bitcoin even and then sold back down to around 30K, 29K, it adds a lot of confluence before we had our crown distributional top. Came back down to these lows in June and July, like I've stated, in the summertime of last year. We then led to our 69K top right after Rosh Hashanah, and the pivot point we utilize here on the Daily Candle Close News, the start of the Jewish Hebrew New Year and the start of this year's Shemitah. So coming up in September, that Shemitah and 7-year sabbatical cycle will end. So after our 69K top, we then resonated back down to around this 35K range. So in the middle of this 30 and 40K range we've been building. So the bottom of the previous year's 236 to the top of this year's 236. A very important and heated range that we pay attention to when pulling Fibonacci extension and retracements here on the Daily Candle Close News. And now we're gravitating right back down and retesting the bottom side of this 236 as of now. There's a lot to talk about, and could we go lower? It's possible, but we won't get into that right now. But just building this range up and adding a lot of confluence to it shows me a definite amount of support that's been held for quite some time. Basically forming what's called a triple bottom now over the last year plus. So very important. We know that this recently was a bear flag, a bear pennant, etc. Just a very bearish pattern that we did see break to the downside. Josh, one of our pioneers, had a great call last week on this pattern, and I should have spent more time on that. But I was more on the consideration that we could possibly see this break towards the upside and retest that 45K, around 44K. I was, using the esoteric signs around numerology and gematria with the latest solar moon that we had, or the solar eclipse that we had at the end of April that gave us 44, the very esoteric signs of Elon Musk buying Bitcoin or Twitter at 44K, etc. after a 4-year, 4-month, and 4-day connection to when he first acquired about buying Twitter. I was looking at all these fours as a very possible 44K range that we could retest, and I'm still adamant about that, and we'll see what happens in the near distant future moving forward. But we know that after this crown distributional top last year and these highs, we broke down into a huge breakdown. This was a double eclipse period, just like this right here, where our all-time highs came in leading into this breakdown, was a double eclipse period, and now we're entering a double eclipse period again. So we see huge volatility, not always to the downside, but more often than none we are getting some downward pressure when we enter a double eclipse period. So again, remember what I said, that's not always going to show some downside pressure there. But we see some high volatility in these markets around a double eclipse period. But this huge breakdown in May that led to our June, July lows traded in a downtrend right here, leading into what created a bear trap that trapped out the bears who thought we would continue to push down even lower, before leading into a breakout that was bullish, that led into a bull trap that broke down bearish before holding support of around 35K or 41K, that 236 right here, or the right below our 382 of the previous year's fib pool, because we hadn't had this breakout yet to be able to pull this fib. So last year when we were here, we were basically seeing a retest after a breakout and rejection of the 618, a retest of that 382 and previous breakout highs of June and August. So very important. We then continued on to this new all-time high, and we're right now breaking down again. Several months ago, I did share with all my pioneers how we could be in the first ever macro ABC correction wave for Bitcoin, something we truly have not seen in the last 13 years. A true macro long-term ABC correction that would lead us into a bear market, and that was showing us that Bitcoin had already become very mature as an asset, and it wasn't going to have the parabolic blow off top and discovery phase and euphoria stage that it usually does, that these cycles were going to become less euphoric and less pressure to the downside over time, basically making this asset less volatile over time, more a store of value, they call it. Nonsense. Anyways, with all this being said, we could still be seeing that macro ABC correction come into play that could take us down to around that 17, 18 to 23, 24K range. And we'll still have to see how this plays out in the long term. We definitely don't want to get too ahead of ourselves. Right now, we've seen $1.5 billion worth of Bitcoin dumped in the last 72 hours. 700 million plus liquidated out of these markets. And I warn you all about how important liquidation, crisis, and events can be. So it's not surprising. Excuse me, let me read this text message real quick. All right, sorry about that pause for a minute. Thank you for bearing with me right there. So again, we just need to pay attention to this time period we're in. We see this downside pressure and this bear trap that I reiterated earlier, where people thought that, we were going to continue to break down, possibly retest this trend line for anyone that had a Drew on their channel that led back to C19 and our sell-off back in March of 2020 and the November breakout of this trend line. Very important time period and something someone could have been utilizing. But if they were to possibly think that we were going to go back and retest this 28K, well, they got bear trapped out of the market. Very classic move. And we could possibly be seeing this very classic move again, a very similar thing happening. But this was, again, a downtrend back in June and July, and this has been an uptrend, just creating a bear flag and a bear pennant. So making a lot of technical analysis, analyst traders, leverage traders, call this move right here. But I believe that they think we're going to continue down. I think we're going to bear trap again, not financial advice, and we could break away from this at any moment. But that's, just my consideration here, seeing as how we've had 3 touch points as a technical analysis. That's a double bottom or a triple bottom, a bullish structure, whereas a double top M pattern or a triple top, etc., is kind of more of a crown distributional pattern, a bearish pattern. So something I'm looking at right here in the long term, when I view out and look at this market from a 30,000 foot overview. Whatever's to come, we knew from this bear trap was going to be about a 20% move either direction, and we go from our breakout and we're down to 26%. Not surprising. Very important. So we know, that's a little bit more than what we were expecting right there. If we were to see that move break bullish, then that could have been a 20% move to the upside, taking us right back there towards the top of our bull trap trend line that we were drawing. So again, we saw this break down, creating what I think is another bear trap, leading into an automatic rally and a relief rally. When we look at things like the RSI, we're oversold, creating a higher high. So right now, with higher highs and higher lows in the structure I meant to say a minute ago, I'm seeing this as a possible bullish divergence forming in the RSI, while price trend in this recent time period has been honestly forming lower highs and lower lows. So I'm looking at this as a possible bullish divergence forming. We'll have to continue to see how that plays out in the near distant future. So those of you that are reading the RSI, pay attention to that. The MACD is still bearish. We haven't got a flip yet. We know we saw one recently at the beginning of May on May 4th. May the 4th be with you, but it was a fake out shakeout. We know this was around the Fed's meeting that's leading into this pre-priced, baked in quality that we're getting in the markets right now. Possibly going to continue lower to create a spring. Maybe we get a relief rally back up to around 41K, 44K, 45K before setting a lower low in the structure, but we'll have to see how that plays out. Right now, we're still holding that 29K range that is a must moving forward right now. So we knew if this was to happen on the downside, we were going to have to take it one step at a time, and that's where we're at. And I just want you all to be aware of that, and don't get caught up in the sauce and all the emotions. Emotions don't belong in these markets. They need to be left on the sidelines. Leave your emotions for real life. So for a perspective of how we look at how prior years have gone, the month of May is typically a bull trap. Right here, we had an all-time high in April. We sold off into the end of April. Bull trapped into the beginning and end of May, the middle of May, around May 8th. So this was Elon Musk's Saturday Night Live when he came out and essentially said Dogecoin was a hustle and a scam, basically calling crypto that. And we saw this. So not surprising. You show me the charts, I'll tell you the news in real life, what they're telling you. Okay? So also, if we go back to every Shemitah year, which started right here in September last year, I've done a decode on this month of May and breaking down all the symbology around Shemitah that I encourage you all to check out. And I show that by mid-May, okay, leading into the end of Taurus, which is May 21st this year, near the end of Taurus is typically the end of the bullish activity in a Shemitah as we get ready to move into Rosh Hashanah, September. So it's not normal to keep breaking down when we have extreme fear in the market, you guys. And it's not normal in the year of the Shemitah to keep breaking down in the month of May. We typically relief rally into the month of May. So a possible relief rally into the month of May, bringing us down to another low in possible July, just like back here. And that was leading into a Shemitah year. So very important that we're getting some recognition in the charts right here. It's hard to understand if you haven't paid attention. Go back and watch some of the work. We went over a lot of this in multiple videos. But as a technical analyst, we share the probabilities and the patterns, and that's what's important here. There's kind of a mixed bag here where we've had bearish patterns forming, but we know how crypto and Bitcoin, they act. They love to drain people emotionally, and they love to be very volatile, and they love to get people bored. And the market always starts to reverse when the most players have left. And we've just seen a Saturday and Sunday sell-off leading into this. Probably that Saturday and Sunday was all retail. Yesterday and today, probably all retail as well, continuing to panic sell as these institutions, etc., push this market even lower. So this wasn't necessarily solely about the depth of TA today, just more so around the mindset and the analytical side of how this sentiment goes in this market. When we are in massive fear, this is what these market manipulators expect, panic sellers. When we're in greed, no one expects pullbacks, and you see people screaming, "I'm never selling." So now that we're near support of this 29K, this is not my favorite time to make calls. But based on previous cycles, this is where we tend to see some relief, especially during the month of May. April showers could bring us May flowers, and that's a very important and old saying. So we're going to pay attention to that moving forward, and the RSI as well. So just oversold, underbought territories that we here on the Daily Candle Close News, we don't trip, we buy the dip, okay? Not financial advice. But we need to see how this market is going to respond, and we need to also be aware of a possible relief rally and trend reversal. We are definitely due for one given the oversoldness of this market, especially coming around the Fed's recent meeting, the double eclipse period leading into this full moon in a few days. We're bearish right here, and we tend to see bearish energy in these markets before the full moon. So I believe we are just washing out those that are too weak and that are unable to mentally and physically stomach these markets. Remember, don't get emotional in this market. it wasn't designed for you to get emotional. It was designed for unemotional people to take money from emotional people. The richest people are always the ones with the richest mindset. Those who have control over their mindset take action. Those who don't have control over their emotion and mindset ask questions like, what should I buy? Or why is crypto in a euphoric moment, and why is it pumping so much? Or, I'm never going to sell, they say. Or why is it going down? They ask questions instead of building a fundamental thesis and, developing a craft that they can utilize. So we know currently today is the correlation to the 22-year, 2-month anniversary of the dot-com bubble. And this is very esoteric as to why we're seeing a sell-off right now in the markets. We know 2000 leading into 2001 was another Shemitah year where we saw financial chaos, economic chaos, war. Okay, we saw 9/11 this following year in 2001. Okay, so very, very important. We're seeing a lot of things happening on the world stage right now, plus a sell-off in the markets, all tying us into a 22-year, 2-month connection to the dot-com bubble. We're in a speculative asset called cryptocurrency right now, and we're entering a bubble and have been in one. So we're gonna watch this bubble pop. Pay attention. So this is very esoteric because we're in the 2022 year, and we know that's the year of the water tiger or the year of the tiger, but that 222 ties us back into order out of chaos. And that is what we are witnessing right now. 222 in the 2022 year. That 75 ties us into cryptocurrency. So very important. We've got that 75 and that 70. Oh, that's about that. Cryptocurrency giving us that 75 right here, matching us to order out of chaos in the 2022 year. 22 years and 2 months today from the dot-com bubble. Today starts the start of Mercury in retrograde, a very important period that we're paying attention to that leads into June 2nd. And we won't discuss that. We've discussed that in previous work. But we're going to continue to make correlations to this dot-com bubble and the C19 that took place 2020, which is a 2-year, 1 month, or a 2-year and 2-month connection leading into tomorrow. Again, that 22 connection right here. We're in the 2022 year. So our lives changed forever on March 11th, 2020. So again, we know the Spanish flu lasted for around 2 years and 2 months before it disappeared on the world stage back in 1918. So leading into this May 11th, the first true day, the first whole day of Mercury stationed in retrograde, then it's very, very important to pay attention to. All this is leading into a 2-year, 2-month, and 2-day connection to the Friday the 13th. The last Friday the 13th we had was March 13th of 2020. So a 2-year, 2-month connection here as well. So very important that we pay attention to this time frame. This Friday the 13th could be very volatile for these markets. Something we'll pay attention to. It's the 133rd day of the year. We know that's giving confluence to this 33 we're seeing right now. Bitcoin first fell yesterday to a bottom of around 33,000, and we'll go ahead and show you where that candle closed yesterday, because it's amazing and adding a lot of confluence to these threes in this decode right now. So we're going over the 2s and the 3s today, but if you pay attention right here to the low on Bitcoin's price chart yesterday, you see we fell to $30,033.33. So the 333 and the 33. That 33 is tying us into Water Tiger, the year of the tiger. We're in the year of the Water Tiger, giving us 33. Yesterday, Ethereum had news about its 33 right here on, I'll show you. It was showing a percentage move for Ethereum in the last 33 minutes. Why would this news article share that like that? Because they know Ethereum, ETH equals 33. Okay, when you type that out, we're in the 2022 year, the 22 year. Okay, so Ethereum was moving in the last 33 minutes, it was moving 3.25%. They said yesterday you saw in South Carolina a 3.3 magnitude earthquake hit. So not surprising. Okay, 1 times 33 is 33. So pay attention to Friday the 13th. Not surprising to see Bitcoin close yesterday on 5.9. When you type out Tiger, we're in the year of the Tiger, it gives you 5.9, May 9th, you guys. Bitcoin fell to a low of $30,033.33. The 33333. So very important that we make these connections right here and pay attention to the next few days moving forward. Again, when we go back to March 10th, 2000, we saw that was a day that added up to 33 in numerology. It's all about the 3s and the 2s right now, you guys. So with all that being said, we're going to leave this there, and hopefully you're not panicked and you're not selling right now in this downtrend. Take care, and God bless, pioneers. Build a thesis and develop a craft and a skill that you can utilize for life. Okay, so take care and God bless. Pioneers rise, build your legacy and build your fortress.